Hey, what's going on, everyone? Welcome back to Let It Grow Investing. Thank you very much for being here. I've got nothing to sell you, nothing to push your way, just simply some stock input for me as to what's going on in the market, what I'm seeing, and how we can potentially play, what's to come before the election time and everything else that's going on out there. There is tons of news. There's tons of different things changing. We've got, unemployment. We've got labor markets. That is kind of changing up. We've got the numbers from Nvidia, other AI, a lot of different things in all those fronts. So thank you very much for being here. If you do want to support the channel, you can do that by clicking some of the links in the description. Whether you're looking to get started with Webull, with E-Trade, with crypto.com. I do also have some affiliate links for First Form, where I'm using a lot of their different supplements for training, longevity, mental clarity, all those different sorts of things. And then Barbell Apparel, which, again, another kind of fitness brand that works for me. And you can get a free hoodie this weekend on their Labor Day sale. So yeah, got those in the description, but otherwise you don't have to, join my Patreon. You don't have to follow the Discord. There's no premium course or anything else, just simply what I'm seeing in the market. So first up, we are looking at week, what are we on? Week 37? Yeah, week 36. We're going to be on 37. So I definitely need more votes over there on Facebook or on YouTube. If you're following along on YouTube, I will count those comments as votes. And for week 36, we had 5 names: Devon Energy, Super Microcomputer, Chipotle Mexican Grill, Wynn Resorts, and Snowflake. And it is actually a dead tie. It is going to be between Devon Energy and SMCI. So if you hear them tiptoes behind me, I got the puppy just hanging out and heard me talk and had to come check out everything. But let's go ahead and share the screen here. Let's go ahead and pull up E-Trade. We'll take a look at SMCI. We're looking at this one now, man. This one is brutal. If you've been in this, oh man, I think we were talking a while back, potentially averaging in on the way up. Well, now, hey, we're on the other side of it. We're on the way back down. So if we look at the year to date, this thing got, up to 1229. And now we're sitting at 437. Well, we got a little bit ahead of ourselves on AI, on all things servers that SMCI does. And we ended up giving a lot of it back. Well, now that PE looks a lot more reasonable at a 22 times earnings. Now to figure out your PE, you're going to take your share price up here, 437.70, divided by how much it earns. That's at 1784, and you should get around 2257, assuming that these numbers are current. So I did have a couple questions on that. Is, hey, how do you figure out, what the PE is? What am I looking at? What does that mean? You can kind of compare this to what the stock has been trading at in the past, and then potentially where it's going based on the forward earnings. The forward's earnings growth, how much that number is over the next 5 years. You can look at that on some different charts. I like to use Reuters, but there's a ton of them out there that are going to have those numbers forecasted over the next 5 years. So that's that. EPS, basically just, how much each share, this $437 worth, would earn in a given year. So that would be the 1784. We got that. We're looking at this thing coming back down to earth, and then they got hit with a investigation as of Wednesday or Thursday. So you scroll down here and you see a lot of different problems. I know one was saying that it is still worth buying, despite all this market sentiment. Still worth looking at. And who was that? If I get into the comments or the articles here. I know there was one saying, hey, this is still looking like a buy. It might be a little further down. Anyhow, I don't know that I want to throw my $200 into this at this point. Part of me says yes. Part of me says go for that risk. Play that risk game. But as far as keeping a hands-off approach on our investing challenge portfolio, which has been doing pretty well, I don't know that I want to throw $200 at it. So what we're going to do instead, we're going to split that tie and we're going to go over to DVN. We're going to take a look at Devon Energy. We should have about a 29% of upside. We do. Sitting at 44.78, average price target is 57.73, around 30% of upside. On an oil play, the whole oil space is undervalued right now. So I think a lot of these different oil names have more room to grow in price. So I feel a little bit more comfortable about buying this as it's down. We're getting about a 4.5% dividend yield on DBN right now as well. 4.4. The PE, yes, oil stocks are going to trade at a lower PE. That's just the way that they're valued. Earnings per share, solid numbers. So you multiply the 8.16 by the 5.51, you should get around that 44.78. That's what we got there. Beta's a lot lower, a lot less volatile when you're looking at 8.6 rather than SMCI, which was over a 3, which is remarkably volatile. As you can tell from going from $1,200 down to $400. They're also looking to do a 10-to-1 stock split on SMCI at the end of September, so that will change things up a bit as well. There's just going to be a lot of volatility over there right now, and also, excuse me, I gotta take a drink and catch my breath here. Also, we've got that election coming up. I'm not too sure what's going to happen there, if there's going to be, taxes, tariffs, slow down, more spending here, there, anywhere. So I don't know that I really want to get into a play that is already struggling, could potentially be hurt more by further investigation. So I'm going to lean into Devon, as I believe that whole oil space is undervalued. You've got, Warren Buffett buying more Occidental, selling out of more Bank of America. He already sold a lot of Apple, but he is being very, very selective in what he's buying. He's buying oil stocks, kind of points a lot of other people to say, hey, maybe these are undervalued and would be a good time to add. So that's one of the reasons that I'm looking to add Devon versus SMCI for this week. So that's what I'm going to circle for week 36. We've got DBN. I will be buying that tomorrow, which is Tuesday. Happy Labor Day to those in the U.S. that celebrate. We've got I got 5 different names this week. I will take a look at those real quick. We'll get right through them. Enphase is going to be number 1. We bought that this time last year. ENPH. Now this one, again, this has been a brutal year for Enphase. We've definitely seen a lot of these stocks in the solar space, in EVs and alternate energy really get hit. And now we had a lot of the problems in upgrading the California software, hardware, whatever they were upgrading to meet the new laws, regulations, whatever they've got in California. We've also got the Europe business kind of slowing down. That should be ramping up into the latter half of 2024 and into 2025. I don't think that either presidential candidate is against solar power. I think Trump is going to be more for, whatever you choose to, power your car or power your home. And Harris would probably be more, on that green energy side. So I think that this one isn't going to be in the crosshairs of a political debate. Could be. I'm not too sure there, but Enphase still has some of the best microinverters on their panels, and they're the easiest to add on to and kind of work with when building out a system. So I still like Enphase. PE is very rich. I understand that. But I do think that a lot of that is based on the trailing 12 months. This TTM is going to be your trailing 12 months PE. If we were able to pull up Reuters, which I can't on here, we would be able to look at the forward PE. I should try to find that for you guys, but I'm sure it is much lower as that growth in the forward is going to come back into the picture. And I'm betting that the forward numbers look a lot better than the trailing 12 months, just with the current economic climate and everything else that's going on out there that surrounds this business. So that is going to be stock number 1. I do believe in it long term. I don't know that we're going to get a quick rally back from where we are right now, but I do believe in it long term. Number 2, do you guys want to follow Warren Buffett? And please get your votes into either Facebook or Spotify or YouTube. I really don't have enough votes on this for the amount of time that we put into, or that I put into, trying to find different stocks for you guys every week. And I would definitely, I really appreciate you following along. There's no wrong answers. And if they are wrong answers, I already picked them, so I'm just as wrong. And SMCI could have been a terrible choice as of last week if we would have bought it Monday. We would have lost a lot by Wednesday or Thursday. So it happens, right? It happens. Number 2, Occidental. Do we follow Warren Buffett and buy Occidental? I've never purchased this one. He's buying it for, a lot of the same reasons I was looking at, saying, oil and gas are undervalued at this point. Prices are coming down on oil. Travel's coming down a little bit, but still in demand. I think we start to see this rotate back up as rates start coming down, and hopefully we can get a soft landing to where the unemployment numbers don't, rise, catastrophically, and we can still have people traveling to work, traveling on vacation, business trips, this, that, the other, and still see strong demand for oil. PE sitting at a 14.7, probably a bit high for what an oil company would traditionally trade at. Earnings pretty solid. I would have to take a look at the forward, but we still have price targets coming in, cut to 82 from 83, still outperform. City goes to 62 from 65, so coming down a little bit. But if we look at the analyst research from around $57, where are we headed to now? About 25% upside. Average price target about 71, call it. So I think that this thing could give us good value, good entry point. We're following along with what Warren Buffett's doing and kind of riding the coattails of what's going on over there. But I do think that that could be a smart play. Whether you're an Occidental or another, oil major, I do think that that could be a smart play going forward. So that's number 2, Occidental, or OXY if you're following along. We've got number 3, looking at Sentinel One. I got out of CrowdStrike. I got out of CRWD. They did report this week. I really haven't paid attention, I'm not going to lie. But I did rotate some of that money from CrowdStrike into Sentinel One. I still wanted cybersecurity. And, this one kind of came back up on the radar that, it could be a good time to add. So they're going to be, doing a lot of different cybersecurity. There's a lot of, influx of AI scams that are coming into your emails, or deep fakes that they are trying to stop. They're trying to, make different product to stop the email phishing, stop the hacking. And I do believe that that is a very much needed portion of security that we're going to need going forward. The deep fakes, whether or not they do a watermark on them to say that, hey, this is an AI deep fake, that is up on bill, I think, in California. That's certainly out there. But in the meantime, we've got to come up with something that is going to stop this. And I don't know that criminals are going to abide by any of these rules. They might on a video that they're putting on YouTube, but if they're trying to hack your email, I don't think they're going to follow the rules too much. So hopefully Sentinel One or any of the other cybersecurity companies can kind of step in and help out on that front. So Sentinel One's got around 23% of upside. It has been punished over the past couple of years. If we look at the 5-year, this thing did have that rally in 21 with a lot of these growth stocks. As rates come back down, as money gets a little bit cheaper, I do think that companies like Sentinel One can start to make a little bit more money going forward. I don't know that we're going to rally back up to 64. But I do think that we could be back in the 30s or 40s in short order in the next couple of years by buying Sentinel One now and, building a position. So that's going to be stock number 3 for me. And let me know if you guys agree. Is that a good one to go with or not? So then number 4, what do we got? Well, we've covered solar, we've covered oil, we've covered cybersecurity. And I still think that we got to go out and buy some consumer staples. A little bit of discretionary spending. I was looking at Dollar General as they got just destroyed this week. Real quick, let's just pull up Dollar General DG. They're talking about weaker consumer demand. They're talking about poor margins, margin deterioration as, their costs aren't going down, but people want more and more value. So, yeah, we went from 124 down to 82 in the matter of the past 5 days, really since Wednesday. And you got destroyed in this one. Some people still saying, hey, this could be a good value, could be a good buy. I could see maybe swing trading this. I cannot see going long on this until some of the storm clears. Oh man, I don't know. Maybe you could. Maybe it's time to build a position. I don't know. I just hope that they don't have to file for bankruptcy or this thing doesn't get any worse. I mean, it looks cheap, right? Retail at 13, beta at a 0.5. You got almost a 3% dividend. Things look okay until you realize that their margins are compressing so bad. And more investigations. Yeah, this is, investor alert. This is every time a company drops like this, you're always going to see these headlines. Hey, click us and get some of your money back. Let's go ahead and sue them. That's not really why I'm looking at this one. But, Bank of America says underperform, maintained at neutral by JP Morgan. Well, what's going on, guys? Jeff here with Let It Grow Investing. And I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time. And they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape for longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years. And I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's firstform.com/letitgrow and check out some product and, see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. Blame the economy for poor earnings, but this was the cause. Lower the forecast. Discounters problems aren't a warning for retail in general. Okay, so maybe not just a Dollar General problem, but or maybe it is just a Dollar General problem, and a company like Target can kind of rally from here. Looked at Walmart, not really so much upside. Target, I entered around 130. We had some good news. They had good earnings up to 153. JP Morgan says neutral, but raised the price target up to 167. That seems like a pretty decent move up to me to remain at neutral. But insider sold, there's a bunch of different things here. But what I'm looking at is a company that is still going to be in demand. Earnings numbers are looking solid. We have a decent PE, that 15 times multiple on a consumer cyclical. I do think that's going to be a fairly valued company. We've got that 3% dividend yield, low beta, similar to Dollar General, but you don't have all the shrinking problems that Dollar General is looking at right now. And they're potentially in some similar spaces. There is a little bit of overlap there, but I think Target's going to be the better bet right now. You've got around 16% of upside off the back of a quarter that was already pretty solid. So, we were down here. This is probably, where are we? I probably entered it around late April, roughly. But you're also getting new price targets now that are coming in higher than even what they were a couple months back. So I do believe that this one has some room to grow. I do think that a lot more people, as they get off of some of the woke political, nonsense, I do believe that this company should start to really rebound and have a brighter future ahead of it as they stop talking politics. Just lay low on that for a minute, please, and just let your business do the talking. So Target is going to be stock number 4 for week 37. And those are a couple of the reasons why. I don't want to get into Walmart that has, 1% of upside or 2% of upside. 2% of upside. Dollar General, we covered that one. Costco is probably already really fairly valued. 3% there. Target's kind of climbing out of more of that hole that they dug themselves. And it looked like the last quarter was strong. They raised and they had beat on earnings and revenue. So I believe that this could be a better play than some of the other alternatives that are out there. And other than tech right now, I feel like everything is getting to the point where it's pretty fairly valued. I mean, we look at a lot of the different, consumer staple companies. a lot of different things there. There really is not much upside. I've seen upside in some of the large cap tech and in oil and some of the travel names. So that brings me to my next pick, which is going to be one that you guys probably aren't going to expect from me, which is going to be Delta Airlines. Man, Delta. I think this is going to be a swing trade for me if we do get into this one, which I know I just said, hey, this investing challenge portfolio is probably going to be a buy and hold. This might not be. I have a hard time buying airlines and holding them for a long time because of the cyclicality of travel. And this one is going through some kind of rougher times with everything with CrowdStrike, everything with a tougher economical outlook, a weaker demand, but there's still enough travel. So a lot of people think that this is going to rally, right? We've got around 45% of upside on Delta. I think it's, if you look at this chart here, we're back at these lows from January, but we're starting to bounce up higher. We're kind of coming off of a strong-ish summer for them. And now we had the CrowdStrike problems and some other, other concerns that are out there. But do we get through the fall? Do we start having more and more success after the soft landing that we're potentially going to have? Do we start seeing these 61 price targets? Do we get into the 80s? I don't know that that's going to happen, but if we got to 60, I would be fine with a 50% swing on a name like Delta. So that is going to be what I'm looking at right now. Those are the 5 that I've got. Those are kind of the reasons why. And let me know what you think. We got Enphase, Occidental, Sentinel One, we've got Target, and we have Delta. Those are going to be the 5 names for week 37. Voting will be available on Spotify and on the Facebook group for Let It Grow Investing. And please get your vote in. I want to know what you guys think about these. If you think I'm completely crazy on one of them, throw out another name. I'm not afraid to look at it. That's no problem for me. Saying that, what names have I looked at this week? Let me move my paper kind of in here and see just how crazy this week was for me. Well, I completely sold out of Adobe. I think we had probably a 25% gain on Adobe. I bought this in the mid 4s and it shot up to 574. I really think that this growth on Adobe was kind of getting capped out. So I wanted to pivot some of that money, build up some positions I already had, add a couple new ones. So there was a good bit of change up this week. I kind of looked at it just earlier and really realized how much I sold and then how much I bought. So Adobe, the PE is getting expensive. This past few months has really rallied. I probably bought it down in that 450 range and traded out of it, 570-ish, 570. It's 574 right now. I forget the exact sell price, but we're in that range. So I sold out of that. I added some more Google to get up to the next kind of threshold for options trading. So I have another 100 shares of Google. I sold calls on Broadcom because they have earnings this week. So I did a covered call on Broadcom at 177.50 to raise some cash there. And my thought here was, well, Nvidia had a double beat. They guided pretty well and they went down. Some of that is on that Blackwell chip that some people are saying they didn't really guide well enough as to where it was going, even though they said they're going to have billions of dollars of revenue by the end of the year on Blackwell. Some of it's on the fact that they issued that $50 billion stock buyback. And some people are saying, well, if they're buying back stock, that means they're not investing in the company to build out the next thing. So there's $50 billion that didn't go into CapEx. They used it to buy their stock back. So what's going to be the next play for them if they're just going to start buying stock rather than building out more growth? So that was another concern. Broadcom, man, this one I still believe has a lot of room to go. I still believe Nvidia's got a lot of room to go. You're going to look at about a 196 price target from 162. So my price point at 177, I might get some shares called away this week, but for a 1 week option for potentially about another 10% of growth, I think it was probably $300-400. I forget. We can take a look at options. we can take a look real quick as to what it was. So I did a September 6th strike for one. How do I do this on here? I always have a problem doing it on here versus on the phone. Maybe I can. There we go. Nope, that's not it. Let me go and put in 177 so you guys can see how we do this. 177.50. I'll type that in at the price point and see what we can come up with. So yeah, this was I think it was higher the other day. I thought it was around 3 or 350, but it might have not been. Anyhow, so right now this strike price covered call. If you're following along on YouTube, you can see what I'm doing on the screen here. We had an ask, which is what I was looking for. I did a limit at $2.30 per share times 100 shares. That is your contract. So potentially I made, call it 230 right now to sell my shares at 177.50 should it go up that $15 in the next week. And truthfully, in the next 4 days, as it's now Monday. So I could potentially sell for $17,750 for my 100 shares. But I already locked in this $2.30 per share, which is $230 for writing the contract to sell my shares at September 6th for $177.50. So you would click this. You're putting in the information that you've got here to write your. Sorry, didn't mean to share all that. You're putting in that information to write your contract. No, this is not a covered call. See, like I said, I don't do this on here. I do it on my phone, so I'm not used to this. I don't want the call. I want a covered call. Why is it not on here? I'd have to figure this one out. But yes, I would be looking at not getting a cost, but an actual income on that share price. So we've got that there. So that's what I did there. I also did that on Tesla. Why is this not working? Let's try to get back to where I was and pull E-Trade back up. So we got that. All right, I think we're back. We good? Yes, we're still good to go. All right, so we did that. I bought some Win because I believe that those are also undervalued. We talked about that last week. I was talking to a buddy who was buying Humacyte, Huma, and they make nerve fibers and synthetic medical devices that are going to be used in a lot of repairing of tissues and connective tissues. And I went ahead and bought some of that for a swing trade at 590. Where are we there? I think we're probably at like $6.05, something like that. So nothing yet. Yeah, 605. But we do have a decent amount of upside here. I think average price target's sitting around 15. So this is one that I'm buying for a swing trade. I don't know that I'll hold on to this thing forever. I won't. But if we start getting above 9 or 10, I'll probably sell out of it, take a couple dollars in gains and rotate that somewhere else. Bought more Nvidia because, as I said, this didn't make sense to me that Nvidia had a double beat, a raise, and then got pummeled. So I bought more in that 119 range, and I believe that this thing can get up to 150, no problem. I think we're going to get there. It's simply a matter of time before Nvidia gets to 150. It will. With that being said, I do believe that the market will give us some better entry points before the election. Later in September, early October, I do believe we're going to have another kind of correction. And then I think we're going to be off to the races and probably set some more highs before the end of the year. UPS bought more for the dividend. Microsoft, I bought more for AI, for Azure, for everything that's going on in those spaces. I do believe that that's going to be undervalued. So yeah, Nvidia, we got 27% of upside. Microsoft, I think it's around 20 or 22. Yeah, 21. Albemarle, I bought more ALB for the standpoint that I believe lithium is getting to the point where it's undervalued. Plus, we had a big sell-off in Albemarle stock as lithium prices have come down. Now that I believe they're going to be set to rise back up, Tesla sales in China are up 3%. I do believe that lithium prices are going to come back up as demand starts to roll back in for more EVs. We've had a slowdown in all things automotive. It's not simply just EVs. I do believe that lithium prices will come back higher. Civitas, man, I've been buying Civitas like it's going out of style. I'm not too sure where this thing's going. But man, if we get close to this 93, 52% upside from here still, we've got a really solid dividend with a special dividend. I think that regular dividend's around 3%. Special dividend gets us to around 9% based on production and how much they are making right now. The PE is cheap. The forward is cheap. The PEG ratio is cheap. Man, this stock just looks too cheap for where it is, historically speaking, versus other oil companies. The beta is low. And I do believe that we can start to see this thing rolling up really nicely. So I've been building a position. Tip Ranks agrees with me. Smart Consensus does not. So yeah, I've been looking to buy this one as well. So that one is there. We've got I bought Viking Therapeutics. Apparently, I'm on a swing trading kick right now. Probably because a buddy of mine told me that they're swing trading 1,800 shares of Nvidia, and I'm like, you're making how much a day just buying at 125 and selling at 127? Man. So I've probably been on a little bit of a swing trading kick. I don't want to have FOMO, but it's hard sometimes. Viking Therapeutics, going to be a competitor to Eli Lilly and Novo Nordisk with Ozempic. This is going to be potentially a new blockbuster drug that their trials are looking strong. It is going to be a startup. It is going to be a speculative play. They say that these companies could snag about 20% of the market. Viking, yeah, some people selling. Okay, that is what it is. That happens. But I do believe that this one could really rally as well. So I've been trying to balance out some Civitas with some Viking, and buying a little bit here, there, and everywhere, and seeing just what this thing does. But if we get this 77% run to the upside, I think we're fairly safe if trials go well. If trials go well, we're good. If they don't, this thing's gonna fall flat on its face. But I do believe that they have a pretty good handle on what's going on out there, and hopefully they can get a product to market sooner than later, or at least get it approved. That would be massive for Viking. So yeah, building up a position there. Hopefully that we start to see some of this rally in this stock, and we'll go from there. And then rounding out the week, I bought more Amazon because I think it's undervalued again. And we still got 25% of upside in Amazon, and I'm building a larger position there. I want to have more shares of these stocks that I really have high conviction in. All things AWS, all things AI, retail demand is crazy for Amazon. Things that I can't get locally, I can simply just go on there and it'll be at my doorstep in a day. So I will buy more of that when I can, and then Chevron, because I believe that the oil space is undervalued again. So 21% of upside, 4%, probably 4.5% dividend yield on Chevron. I do believe that this stock has full potential going forward to really continue. I don't think as a lot of people said before, that solar and EV is going to take over the world. I believe that Chevron and Exxon are going to pivot to make money in whatever energy space that they see fit, and they're going to diversify as they need to if oil doesn't go the way they want it to. So I think that they're going to be a player regardless, and it's at a good price. It's at a great dividend yield, and I'm trying to bump up those dividends. So that's what I got there. Man, that is a long list of things I bought this week. We talked about Nvidia. Man, I keep hearing people say Nvidia is going to be the next Cisco. Cisco is going to be your telecoms company that really rallied in the 90s, and they haven't done anything since, right? If we look at Cisco, we pull up this whole chart. We're going to look back in 2000, and we're going to see that this thing was higher back then than even it is now. It was sitting, close to $70 then. We probably hit 70 at some point, and now we're at $50. Is Nvidia going to be the next play that does this? I, for one, don't believe that it is. I think that Cisco is going to have a much longer product cycle. You can have telecom, you can have LAN, lines that the computers need in order to build out their network. Those products don't normally get outdated that fast, right? So you're going to have these this wiring, this cabling that they might come out with the newest, greatest thing, but a phone line is a phone line, and computer chips have a much shorter product cycle, right? They might be 2 to 4 years versus telecom, which might be 20 years. So I think that Nvidia, even when they come out with this Blackwell, people are already thinking, what is the next one? No one really thought that was Cisco. Yes, we had to get everything kind of digitalized and up to speed with getting on the internet. But now that we're there, it's all built in. All that infrastructure is there. Nvidia is going to continually need that new AI chip to run GPT-5 to GPT-10 or whatever newest, greatest AI invention is out there. So I, for one, don't believe that Nvidia will follow this Cisco thing and be the Nvidia of 2024, or the Cisco of 2024. Sorry, I do believe that they will continue to reinvent themselves and have that need for newer, later, greater chips than what it was in 2010, because a 2010 chip isn't going to run GPT-4 or GPT-5. It's simply just not the same in comparison. Now, do I think that some people are a little bit ahead of themselves on Nvidia, saying that it's going to 10 trillion by 2030? Potentially, right? That's still a 3x play on the largest company in the market in the next 6 years. I don't know that we're going to get there, but I do think that we can get to a 5 trillion or a $6 trillion company by that time frame, which is still potentially a double from where we're sitting now. So I don't think they're the same. You might. Some of the market does. Some people are saying Nvidia is going to 40. Some people say, hey, Nvidia is going to to the moon, essentially. So if I do take a quick look at Nvidia, I know we've talked about this thing over and over, but it is top of mind for a lot of people. So let's take a look here. When we're looking at analyst research, we've got some people saying down to 90, some people saying 200. I did just see a report that someone said Nvidia is getting to 40. I don't see that. 90 is completely plausible for me. I've told you guys before that I was buying it in the 90s. We bought it, 3 weeks ago in the 90s. And, if it gets back down there, I'll buy more. If it gets down to 100, I'll probably buy more as well, because I can't, avoid a great sale on a quality stock. So that is what I'm looking at. But I'm sure you have your own opinions as to what's going on out there as well. We did kind of briefly talk covered calls. I was trying to pull that up. It's a little bit hard on here for me because I'm not used to trading on the laptop. I'm really normally on the go and trading either on my phone while I'm working or, on a lawnmower or whatever. I will be spending more money on a lawnmower than most people would even consider. But that is just basically my office. So that is very common for me to think about doing that. Hey, I'm going to look real quick. I'm going to buy that as I'm looking at it. But if you're not comfortable with covered calls, if you don't want to get into the options of that, but you still want to have that dividend, you can look at XYLD. This is a global X S&P 500 covered call ETF. So they basically take your money, they buy the shares, and then they write the covered calls for you. You're getting about a 9.3% dividend yield. You aren't going to get the price appreciation because they cap out that upside, right? So when I was telling you I was buying or selling Broadcom calls at 177.50 and it's at 162, that is my cap, right? I'm not going to make more. If it goes to 300, I'm selling it at 177.50. That is just what the nature of covered calls is. That is potentially a downside, but I have money today and I still can get my dividends on these stocks, and I still get that little bit of price appreciation should it get there. If it doesn't get there, I still get the strike price. So I'm still getting that $230 for writing the covered call on Broadcom, and that's essentially what XYLD is doing for you by buying into this ETF. So you're not going to get that price appreciation as much, but you will get that dividend yield, which is really nice to have. So they are going to be buying mainly U.S. Stocks. 34% of their stocks are in Apple, Microsoft, Nvidia, Amazon, Meta, Google, Berkshire, Broadcom, and Tesla. So there is a lot of volatility in these names. the friend that I said was, buying 1,800 shares of Nvidia, I told him, hey, you could write a covered call. This was Tuesday when stocks where Nvidia was at like 125. I said, hey, you could write a 131 covered call on your 1,800 shares and have $11,000 worth of premium simply by writing the covered call on Nvidia for 4 days out and make 11 grand, right? So you can easily see how they can do this with enough shares, that they're getting enough volatility in these stock prices from these tech names that they can write the covered calls and then pay you back in that way of that 9.3% dividend. So similar with what I was saying with Broadcom or AVGO, same with Tesla. They are volatile stocks. They are really nice to write covered calls on. Apple, not so much. That one is normally priced to perfection. There's very little in premium on Apple, but some of the other names have a lot more volatility mixed in. So we've got that. We've got, I talked about the fact that I believe there's going to be something that brings us lower by the time of the election, whether that is unemployment numbers this week or labor market conditions dropping off. Inflation, decides to go back up. If it's any kind of sickness, illness, pandemic, other problem, there's going to be something that I believe is going to, send the market down, whether or not it's a cyber attack, whether or not it's an update that doesn't work in the way of CrowdStrike. I think there's going to be something where the market gives it back, right? And we've been on that stairway up, but we normally take the elevator when we come back down. So be ready for the fact that we could get another potential large sell-off before we get that next couple staircases or stair steps higher. I do believe that we're going to be on that elevator ride at some point. So try to raise a little bit of cash and potentially be ready for what could happen between now and election day, because I do believe that we will get some kind of correction in that time frame. We've got another thing. I'm going to turn off the screen sharing real quick. We were looking at the fact that Harris is talking about taxing on unrealized gains. This has been all over Facebook. Someone is trying to explain it. And, hey, grandma bought a house for $50,000. Now it's worth $500,000, but she's going to get this tax for, however much that she's going to have to take out a loan against the house to pay the unrealized capital gains. And that is not necessarily true, right? This is essentially what she's talking about, or this is what the Biden plan was, but it's not necessarily written for those that are in those lower, I'm not going to say lower. This is written for people that are wealthy individuals above $100 million. So this is not essentially aimed at me, for sure. I don't know about you, but it's not aimed at me. But I don't like it. I don't like it because it creates the precedent that it's okay to tax the ultra wealthy on the shares that they don't, or the stocks that they own that they're not selling. It hasn't been on property that I think it is people living off of dividends, living off of stocks, but never selling it, and they're not creating any taxable revenue for the IRS. They are simply just writing that dividend income tax check, which is a lot less than a capital gains event. So I don't like it because I think at some point it goes from 100 million down to 50 million, down to 10 million, down to 5 million, and down to 1 million, and then it really starts affecting everyone. They start taking all your equity out that you've worked so hard for, and then you're paying on this year after year after year until you just simply can't afford it anymore. And it just becomes this socialist state that I just don't like the thought of where this could potentially go. So I have to say that I don't like it. It's not aimed at us at the moment, or not aimed at me at the moment again. But I think that at some point it has that trickle down effect of where does this stop? We open the door and then everyone starts barging through kind of situation. So that is one thing with the unrealized capital gains tax that some people are kind of rushing. I've even heard people telling me this week that I want to take a loan out against my house so I don't have to pay or I don't have to borrow against it in order to pay these taxes that Harris is going to put in when she gets in. I'm like, no. That is not how it's going to happen. And taking the money out of your house to pay back a unrealized capital gains on your home doesn't make any sense. That makes absolutely zero sense. That you're going to borrow on it now before, I just don't understand what these people think that they're trying to explain to me sometimes, but it's truthfully a situation that I heard just this week. So don't freak out. I really don't know that it's going to go through. I don't think it's going to get passed because I think there's too many politicians that are going to be affected negatively by it. So I don't think that they're going to push it through. But that's that. And then just to wrap up the episode, we talked SMCI. The other thing I wanted to bring up was MPW. I will go back to sharing my screen here. MPW, yet again, did what we did not want them to do. And that was a dividend cut. And if you aren't paying attention, I'll bring it to light. MPW is Medical Properties Trust. We've been buying it for a while. We've been looking at it. They've cut this dividend now twice. They cut it in half. The stock actually went up a little bit afterwards, but this was a 13% yielder, and now it's cut down to 7.2. So we had Medical Property Trust cuts quarterly dividend to 8 cents a share from 15 cents. So again, another bad news that if you're buying this for the dividend, well, there goes your dividend again, right? So this thing has really dropped. If we look at the year to date, we're headed up, but it's definitely been rough over the past few years. If I look at the 5-year, nothing but down. They sold off some more property. They are trying to raise cash. They're trying to turn things around. I really want to say that this stock makes sense, but man, they have so much debt and so many problems. It's really hard to know what exactly MPW is doing. Steward Health. Yeah, we were talking about that was probably one of the reasons that this did move up, is the fact that Steward Health and Medical Properties Trust reached settlement. Steward Health is the one that owed them for back rent for months that they haven't paid. I guess they finally came to some agreement. Time has come. I don't know what that one is. Not yet a value trap. Turnaround may be slow. Speculative buy. That's probably exactly how I feel. Like, I think it could be a decent entry. I don't know that we're out of the woods yet by any stretch. And times have been really, really tough when it comes to MPW. So I think that we could be in for the worst of it, or that this, sorry, I wasn't even sharing. I thought I was sharing my screen here. Sorry, guys. But I think that if I'm looking at MPW, here we go. 5-year, you see the 5-year, we're way down. If I look at the 1 year or the year to date, we're trending up. So yes, it looks better now, but we're not out of the woods. Some people are saying a speculative buy. If you're buying it for the dividend, I would tread lightly. I think the bad news is cooked in at this point. I really hope. I don't even own much of this anymore. I think I only own it in my IRA, and we've got some in the let it grow investing challenge portfolio. But that's about all the news that I got for you guys this week. I'm sure there's more. We talked Dollar General getting destroyed after margins. Did we talk Intel? Oh man, I don't know. Sorry, I think I got one more for you. Intel was rallying. They are potentially selling off some business. Some people are getting back in. This is about a 9% gain over the course of Friday. 24% upside. Some people think this is going to the moon. I don't see that. This thing has been punished. It's been really rough to be an Intel investor. I don't think I have any of this anywhere. I hope not. It's been so brutal. But are they going to really rally and give AMD or Nvidia a run for their money? I don't know, man. Price earnings trailing is rich, right? At 90 times, that's really rich for a company that's not doing that great. But I got to imagine going forward that earnings should be starting to pivot. Intel is really trying to turn this around. It says slashing costs, selling units. I think their Altera was one of the segments that they might be selling. I might have that wrong. I don't see buying into this at this point. I know we've looked at it a few times. Maybe. That's all I can say is maybe. I don't know which one you'd rather be in, Intel or MPW at this point, but they're both painful. They both been really difficult stocks to play. I don't know, man. There's a lot of tough names to play right now, and I think you got to be really selective with what you're buying, and really try to figure out which ones work for you. I don't really think we even got into CRM or CrowdStrike, but I think you guys know my thoughts on CrowdStrike. Just to summarize real quick, it's been really painful. I would potentially buy back into this thing just for the kind of turnaround story. I don't know that they really went out of their way to ruin anyone. But, Delta is kind of going after them for a lot of lost wages and damages that they lost from having that big shutdown. And I still don't know why Delta couldn't get their stuff back online when everyone else seemed to be able to. But I just really, I hope that they can get back on track because they were one of the most all-in-one shops that was out there for cybersecurity. They were an elite player in the group. And then, that one update really dropped the ball on everyone, really dropped the hammer on them. And I hope that they can get back online and really recover from this. But I do also want to say that a lot of the security platforms are prepaid. So you might not see it in the next quarterly report, but you could potentially see it in future quarterly reports that people have left. We heard a bunch of people leaving, within the hours after the CrowdStrike crash did happen. People were pulling out of CrowdStrike. And that might be a case where it's not recognized in this quarter, but it could potentially be recognized in next quarter. So before you get back in, definitely think about the downsides and potentially how many people lost or left out of CrowdStrike, and then how many people are going to be suing CrowdStrike. So probably somewhere in the low 200s, 215 to 230, maybe I'd be looking to add CrowdStrike. But where is it now? It's probably sitting 260, something like that. I'm going to take a look real quick. I won't share my screen again. But CrowdStrike, where are we? We are 277. So it did go up on Friday around 2%. Maybe if it dropped back down to well, man, PE is 397. Good night. Maybe we'd have to take a look at this one a little closer to see where this thing is going and just how bad it's going to be on that next earnings call. So that's all I got. That's my sheet of notes here for you guys. So I turned in my homework. Hopefully you guys can help me out, get your votes in. And like I said, if you do have any kind of recommendations on stocks that we need to look at, I've heard quite a few from a couple different members this week. We definitely looked at a few of them. I bought into a couple of them as the spec plays that I was talking about. And thank you guys for stopping by. Please make sure to like, subscribe, and share. If you need help getting started, links in the description. And I do have some affiliate links in there as well. Thank you guys very much. Hopefully you have a great Labor Day. I'm going to get back to it. And hey, we got soccer practice tonight too for our first game this coming weekend. And, some people might be sleeping on getting practice in, but not me. We're going to get back out there. We're going to get that work in. We're going to hopefully get that W first game of the week or first game of the season. So thank you guys. I'll talk to you soon. Take care.